Hey guys, hope everything's going well. Alrighty, today I wanted to touch base on gold and silver again, one of the topics I used to talk about a lot. And I've seen some videos online about how interest rate hikes, I'm not talking about the 10-year yield, I'm talking about the Federal Reserve and their Fed funds rates. The thesis of some individuals is that when the Fed raises the short term interest rates, that's bullish for gold. As we've seen in 2015, 2016, when gold was bottoming out. If you saw that in 2003, gold was rallying at the time in the 1970s, where interest rates were rising and gold went up. So, a few things about all those time frames, and then I want to talk about today. Okay, 1970s, you had interest rate hikes. You have to remember the US got off the gold standard at that time. And they raised interest rates, and the US dollar was losing the purchasing power because gold was no longer $35 an ounce because it was pegged to $35 an ounce during the gold standard. So interest rates were rising, but it didn't keep up with the inflation rate. So you had gold go up. And then when you raise interest rates, the cost of borrowing goes up. So you get, and also banks make more money on that. So there's more lending going on. So that's where you get the inflation going on. So that's what the premise was. Now, there were times when interest rates were rising and gold really didn't go up. It was basically nowhere. Throughout the 1990s, the interest rates went up, but gold went nowhere. So, what could be the reasoning why it didn't go up? Well, if you look at the level of interest rates, they were not as high as the 1970s. So, what can someone conclude with that? Well, you had positive interest rates. And 1970s, you had negative interest rates. That was bullish for gold, silver, and the collectibles market that I'm in or I'm involved in. Now, 2003, you did have negative interest rates, but when you looked at the 5-year and 10-year tips, the interest rates were negative. So if you're just looking at just year over year, interest rates were negative. And also, you have to remember gold was so low that it was ripe to go higher. 2015, 2016, you had rate hikes, and then gold and silver did follow up to the upside. And now, today, we're at a point where gold is at around 1800. It's gone nowhere for about a decade if you look at decade over decade, but from a trading perspective, I'm looking at it, okay? I know some people are going to be like, hey, look, over a decade went nowhere. Yeah, you're right. It didn't go anywhere, but I'm looking from a trading perspective. Right now, if you look at the 10-year tips, which is negative, it's negative, what, 48 basis points about? So if you raise those interest rates, the Fed funds rate, you're still going to have negative interest rates, and that could just propel gold and silver higher because you have all this news baked into the cake where the Fed is going to raise interest rates 7 times. I don't personally think the Fed's going to raise interest rates 7 times this year. I think it's going to be like more like 3 times. Okay, I could be wrong. They raise the rates 3 times, and everything's priced in. Everything is pricing in 7 rate hikes, but then they say, "Oh no, it's 3 rate hikes." So, long story short, there could be a situation of, wait until the news, and then if there's an exceeding of expectations, which we're probably going to have right now, then gold is going to probably go higher. And so, in terms of interest rates rising and the price of gold, it could just be that the market was pricing in more aggressive rate hikes, but those expectations didn't fall into line. And because of that, that's why the commodities went higher. And you have to also look at market composition. From my understanding, a lot of smart money players they're going long 10-year treasury, they're going long other treasury bonds as well. And if you go long treasury, the yields go down on the long end. So what could end up happening there is you have lower rates on the long end of the side, which is, from a trading perspective, that should be bullish for gold. So it doesn't happen all the time, but that's one thing that I'm looking at. So long story short, in terms of just rate, every time you have a rate hike, that's bullish for gold and silver. Not necessarily, in my opinion, because look at the 90s. 90s gold basically went nowhere. I mean, it was definitely in a trading range, but there was no bull market then. And then you also had the yen carry trade at the time, where the yen weakened to about 80 in 1994, 1995, and then it just sharply rose up to close to 140 before long-term capital management blew up that hedge fund, and the dollar was rising up until that point. So long story short, just because the Fed raises interest rate doesn't mean that it's bullish for gold and silver. I like to look at negative versus positive interest rates, and I talk about this in my collectibles video. And right now, we're still not at positive interest rates. Now, that may turn from negative to positive within the next year or so, and that's probably when I'm going to get bearish gold. That's when I'm going to get bearish silver, and eventually I'm going to be bearish the stock market. I mean, I'm looking at the euro dollar futures market. They're indicating turbulence ahead in 2024. So I'm looking at all that. It doesn't look good, guys. Anyways, let me know what you think. Smash that like button, subscribe to this channel, and I'll talk to you later, guys. Thank you. Bye.